So in this video, I'll be discussing some simple position sizing rules and how these rules have a huge impact when it comes to your own trading performance. So over the next 10 minutes, I will change how you should be thinking about position sizing and how this can have a huge impact in your own trading performance. So before we move forward, please note that there are over 200 free videos available on this channel for you to learn trading and investing. Just go to the link here. I'll make sure the link is easily visible. Also, when you click on the playlist, each and every video has been organized in a playlist so that you can learn in a proper sequence, take notes, and get better at trading and investing. And make sure you have clicked the subscribe button and the bell icon. This is the only way you will get notified when a new video is released on this channel. And if you think our videos deliver value to you, please consider hitting the like button because it really helps out our channel. Now, the first point I want to tell you is that fear of missing out, which is also known as FOMO. This is the single biggest trap in the market that you lay out for yourself, and you should always avoid this at all costs. Now, what does FOMO make you do? The first thing is you develop a mindset of trying to buy all at once. What do I mean by this? Let's say you identify a stock that is in a range and price is moving like this, and then it has a breakout. What FOMO usually does is that it will make you buy everything as the breakout is happening in the market. And why this is a huge trap? Because when the stock starts reversing, you will be taking a loss on entire quantity when the stop loss is hit. Now see, FOMO will make you buy here because the moment stock breaks out, your mind will tell you that it will keep on trending higher in a straight line. And that is why you need to get in as early as possible here in order to ride the entire trend in the market. This actually is a huge mistake because you got to understand one thing, that in trading, the odds of trade failing are the highest at this specific point. That is when the breakout happens. That is why you got to take it slowly in terms of building your positions, because if you start scaling in too quickly and the stock, instead of moving higher, starts reversing, this is what will then lead to massive drawdown in an account. If you take a recent example of the trade I did last week, I explained that I've started buying into metal stocks when the breakout was happening, and I got into something like Tata Steel, JSPL, and even SAIL. Look what has happened this week. As of Thursday, price is making now a structure of lower high and lower low, and price has again fallen back in this range. So just imagine what would have happened had I bought 100% quantities here and then seen something like this happening on the chart. It is very difficult, and that is why I never recommend this approach. Now, to deal with this situation, what I recommend is a technique of reverse pyramiding, or it is also known as inverse pyramiding. Now, pyramiding is a method where you add positions in a trade that is confirming your opinion, and that is the whole idea behind this concept. You got to lose less money when you're wrong, and you need to make more money when you're right. This is the only way your account will grow, and very few traders understand this. In this particular technique, you initially buy only 25% position and then you scale up remaining 75% position as the market confirms your opinion. Let me just explain this to you in a recent trade. Now in Tata Steel, this was my buying price and this was my stop loss. So the way I have structured the trade is that when the breakout eventually happened, I scaled up 25% here, and now I'll only scale back when the price pulls back and then gives me confirmation. Now this is one concept that I've taught extensively in the community, and this method is known as 25% plus 75% scale-in method. And if you're not a community member, I've also covered this method in the risk management series. I've linked up the videos towards the end of this video. So what I wait for after I've taken position is for stock to pull back, because this is where risk reward will be hugely in my favor. And then I wait for one wide range bullish candle with volumes. Now at times the retracement is not that deep. Sometimes price just pauses here and then gives a confirmation. But in case of metal sector, there's been some news flow. That is why the sector has pulled back within this breakout range. And that is why I'm waiting for a candle to form here. The advantage of this method is that, let's say my reading about the metal sector was wrong and stock continues to move lower and hits this stop loss level of mine, I'll only be losing money on 25% initial position. Instead, if I go ahead and buy everything at once, that is 100% position at this point, and when the stock reverses, I'll be taking loss on entire 100% position. So if this can happen in one trade, just imagine if the same thing happens over the next 100 trades, how will my account grow over a period of time? That is the main reason why I adopt the approach of 25% and then 75%, because I wait for a stock to break out, for it to pull back some more, and then to confirm my opinion. That is the only way I'll allocate majority of money, and this is the only way I can ensure that my account will continue to grow over a period of time, because I am particular with how I scale in using simple position sizing techniques. Now when it comes to trading, what very few traders understand is that there is a very subtle balance between learning how not to lose money and how to make money in the market. If this represents making money in the market. And this represents how not to lose money in the market. Majority of market participants are only focusing here because let us be honest here, most of the people who come to the market only come to the market to make money out of it. But the actual thing that you need to realize, and this is where position sizing helps you a lot, is that if you learn how not to lose money or to lose less money when you're wrong, this is when you'll automatically start making a lot of money in the market. Because when you're wrong, you'll be losing less, but when you are right, you will be making more money. So this is a subtle balance that most of the traders don't understand. And this again remains a huge mistake in the market. So when it comes to position sizing, not only does it limit your losses, but it also helps you ride the entire trending move better. What you can do is just rewind this video and read what I've written here because this is important. Because the third important benefit of position sizing, which is the mindset, this is what I want to explain in detail here. So let us just assume stock is in a range and price fluctuates up and down before breaking out like this. So what typically happens is that price forms a structure of lower high, lower low. It pauses somewhere around the breakout region and then it again starts trending higher. So our way of position sizing is to buy 25% when the breakout happens and remaining 75% when the stock has pulled back. If you look at it from the mindset point of view, this is where you will get huge edge over other traders who don't understand this process. Now, the first point with respect to the mindset that you need to be aware of is that at this particular point when the breakout is happening, that is point A, don't bet too soon in the market. Be patient because odds at this point are high that the trade can fail and the stop loss can get hit. The second important point, which is with respect to pullback, is that when the breakout has happened and price is pulling back here, this is where news flow will be really negative and very few people have the courage to buy here because in general, most of the traders like to chase momentum and that is again a huge mistake in the market. Now, the third important point here with respect to mindset is your ability to focus to execute your plan when this pullback will be happening. Remember, most of the traders, when the breakout happens, they go ahead and scale in 100% position. And whenever the pullback happens, which is usually deeper than the breakout price, this is where a lot of traders will begin exiting their position. And this is where your edge will lie in the market because with the help of right position sizing, while others will be getting scared and exiting trades here, you will be precisely waiting for the right opportunity, for the right kind of confirmation to again take up majority of positions here and to see the price move higher. This is the difference about a trader who's well planned in terms of position sizing rather than those who just simply blindly go ahead and buy 100% positions here just because a breakout has happened on the chart. Now, once you've addressed the specific problem of position sizing, there are two more points that need to be addressed. The first point is how many positions you should be taking in a trading account. How much is too much in a trading account? These are topics that a lot of traders struggle with. What is the risk that you will face of buying too many stocks? And what are the ideal number of stocks that you should be holding in your portfolio? That is trading portfolio. The second problem that you need to address is you need to define the maximum loss across the account that you will undertake. Now, this concept is very underrated and most traders actually don't know how much is too much loss for their own account. When it comes to me in my own trading portfolio at any given point of time, if I face more than 7-8% loss on entire open positions, I simply go ahead and exit all my positions. Let me now come to this specific part of problem, which remains a huge problem for mostly beginners in the market because they just don't understand how many stocks they should be holding in their trading portfolio. So for those of you who are channel members, please note that the live video on strongest sectors and stocks in the market will be releasing tomorrow. Please keep your notifications on. And for those of you who are in the positional trading membership, episode 13 will be coming out tomorrow at 9 p.m. and the same will be released in the community section. So for those of you who are not channel members, you can just join channel membership for 1 month, watch all the 60+ videos and then cancel your membership. Do not forget to read the updates in the community section because this is where I update about the changing market cycle, strongest sectors and strongest stocks in the market. Now, when it comes to what is the ideal number for open positions in a trading portfolio, this is how I define things. If the trading portfolio is between 5 to 15 lakhs, then I feel one should only be in the large cap space and should hold no more than 5 open trading positions. This is where I think risk management can be useful and this is where you can manage open positions well. Now, for a portfolio size of 15 to 30 lakhs, maximum you should be holding is 8 to 10 stocks. You need to give stocks enough capital allocation for it to grow a trading account for you. In this particular case, you can target both large cap and mid cap space. And if your trading account is greater than 50L, then I feel no more than 12 stocks you should be holding. You should be allocating decent amount of money per stock, and this is where you can get higher returns in your portfolio. In this particular case, you can also go behind large cap, mid cap and small cap space just because of your portfolio size, and you should be also having some bit of experience in managing overall risk in your portfolio. Now, I have made a dedicated playlist on risk management where I have explained all of these things in detail. Just click on the playlist in front of you and watch all the videos in sequence, because that is where you will truly understand the principles of risk management and position sizing. So thanks a lot for watching this video, guys. Kindly consider hitting the like button and sharing the video if you find the content useful. Have a great weekend ahead. Take care and be safe.